Hi, good afternoon, everybody. Welcome to today's webinar. We are in sunny London. It's 2 p.m. British summertime, and wherever you are in the world, I hope you're having a lovely day. We've got attendees, it looks like at the moment, from Africa, Australia again. You're keen in Australia, and we have Europe and obviously the UK as well. So welcome to those of you that are tuning in. At the end of the webinar today, I'm going to talk to you a little bit about what's happening moving forward. But this webinar today is all about how you can create winning strategies using Tekton. So during this webinar, I'm going to play, it's pre-recorded. I've done some pre-recorded material for this one, and I'm going to play that in a moment. But what I would suggest, you have the chat function available to you where you can ask questions. What we'll do is we will ask questions at the end, so you can actually build them throughout the webinar. And then we'll spend 5 or 10 minutes at the end to answer any questions that you may have. So I can see we've got people joining all of the time. So I'm just going to hold off just for a minute or two before I start. So what we will do is just have a quick overview as to what we're doing and wait for the last few people to join the webinar. So I'm going to be doing a draw as well. We've got coaching time to give. So I'm going to be giving a coaching session, a 1-hour coaching session for free with myself away at the end of this workshop. And I'm also going to be giving to the same person a £100 Amazon voucher. So as you recall, if you've watched some of our previous webinars, we want people to suggest content for the webinars. We want people to watch these webinars. They are free to watch. They're not chargeable. We do have paid for material. We do have education. We do have coaching time. And we do have free material as well, which we are going to be introducing from time to time. So we'll just wait a moment or two. I can see a few more people coming into the lobby as we speak. So we'll just wait just for a few moments more, and then I'll get started. One thing for the future webinars is, guys, you can actually register for these well in advance. You don't have to register straight at 2 p.m. or the time of the webinar, because that does then delay things. It takes 2 or 3 minutes to get connected and get registered. So you can register at any time prior to the webinar, the morning, the day before, and then once you're registered, you'll be automatically put into the lobby to wait, and then we can then bring you in as and when. So we are now fully, well, I won't say fully, but we're now quite a nice healthy number watching. So let's get started. I'll play the video, but remember, use the chat function to ask any questions you may have, and I'll come back to you at the end and answer them then. So enjoy. Okay, so in this workshop, we are going to not only talk about winning strategies, we're also going to show you using Tekton how we can create them and how we can create strategies that invariably will be what we class as a winning strategy compared to one that is a losing strategy, and the little factors that make them up. So you have the ability, when you leave this workshop today or watched it in playback, you now can apply these same processes to your trading using Tekton. So what makes a winning strategy is the topic of today. But previously to that, we need to establish what is a winning strategy. Okay, what is a winning strategy? How do we define a winning strategy? It's okay being able to create one, but we need to know what one is. So the first part is, what is a winning strategy? Contrary to popular myth, a winning strategy isn't one that never loses. A winning strategy will have losses. Now, I've met many people over the years in my capacity of teaching people how to trade. I've also met people from the industry. I've also met people that are advertising and trying to get me to trade with them and trade their systems, etc. And I met one guy famously who said to me, my success rate is 100%. He was trying to tell me that he never had a losing trade in over 4 years of trading. And he wanted me to trade the same system, clearly for a reason. Now, it's impossible to have a trading system that never loses unless you have got completely ridiculous risk management settings in place. And when I say completely ridiculous, I'm talking about dangerous risk settings that can cause so much open margin, and risk settings that enable any trade to eventually become a winner, but also go through a huge downturn and drawdown of an account in the process. It's dangerous, and certainly something that the regulations and the regulatory bodies are preventing people from doing these days, because it can actually cause damaging reputation to the industry, but more so damaging emotional psychology to a trader who's put money into an account only to be trading a strategy that is, or being taught to trade where the trading systems running are using excessive risk management. So we are going to cover risk management. I do cover risk management on the Trading for Beginners workshop, which you can find on our forum and community. So the Tekton forum and community has, or will have, the Trading for Beginners workshops available very, very soon. Plenty of free content for you guys to get and use on Tekton. Trading for Beginners is a paid-for product. It's very, very good value. It's using bite-sized chunks, teaching people, including risk management, how to trade and set up a trading business from home. So starting at the basics and moving to more intermediate stuff. So if it's something that you really want to excel at, I strongly advise getting hold of that. So it's very, very, very good value. But winning strategies aren't a strategy that never loses. You will have losing trades. It simply doesn't happen. It's not possible to have a strategy that doesn't have losing trades. So don't believe anybody that says that to you. Of course, a winning strategy has to have more winning trades in number than losses. What I mean by this is, let's look at a bank of 1,000 trades. So a time period of whatever it is. It might be 3 months, 6 months, or a year or more. But in that period, let's take 1,000 trades that have been placed. More than 500 of them have to be winners to be able to call it a winning strategy. So over 1,000 trades, or let's say 1,000 trades, more than 500 of them have to be winners to call it a winning strategy. If not, the losses will outweigh the winners. The success rate goes below 50%. If the success rate drops to, say, 40%, the failure rate increases to 60%, and therefore the losses outweigh the winners, and the strategy then is no longer a winning strategy. And that all makes logical and reasonable sense then, doesn't it? Now, you may or may not be pleased to hear at this point that this isn't necessarily so. I've covered two most important factors off in the previous slide. Firstly, that there is no such thing as a winning strategy, or any strategy, come to think of it, that never has a losing trade. And that is reality. That is completely accurate, and that is the truth. The second part that I explained to you about having more winning trades than losing trades to be a winning strategy isn't necessarily so. And let me explain what I mean by that. You don't have to actually have more winning trades than losing trades to have a winning strategy. exactly that. I'll repeat that. You don't have to have more winning trades than losing trades to have a winning strategy. Contrary to that, you can have a strategy that has more winning trades than losing trades, and it still isn't a winning strategy. I'm going to show you some of these in a moment on Tekton. I'm going to show you both scenarios. You can have a strategy that has less winning trades than losses, and it still is a winning strategy. So you can have a strategy that, say, takes 1,000 trades and has, say, 300 plus winners and 600 plus losers to make up the 1,000 trades in total, yet it's still a winning strategy. That is the reality. And today in this workshop, I'm going to explain and share that reality and how it works. So in this workshop, I'm going to show you exactly how that statement that I've just made comes about and is proven, and how you can benefit from this theory, but more importantly, the reality using Tekton algo trading software. So let's get started. Okay, so we're going to create a brand new strategy. We're going to create a brand new strategy that includes two conditions. So price has to be in a certain area relation to the moving average, and then the condition is going to be when price crosses, or when the stochastic crosses above or below a certain number, to give us the ability to see which direction the market's in and then get the trigger on the stochastic. What I'm also going to do here as well is I'm going to have a close sell and a close buy function, but you'll see what I mean as I talk you through it. So first of all, create new strategy, add algorithm. So the first thing I'm going to say is price is above the 50 moving average. So price has to be more than the 50 moving average. So just scroll down a little bit, 50. EMA, and on top of that, in addition to that, I now want the trigger. And the trigger is when the stochastic, and the period setting is 1433, stochastic, okay, crosses above the number 20. So I'm looking to buy here. Apply, action, buy. And that's created the buy condition. Price is above the 50 moving average. The stochastic has crossed above the 20, so we're looking to buy. It's gone from an oversold position going upwards. Now I'm going to add the sell. It's the opposite way round. So if price is less than moving average 50, EMA, apply, that's the direction, and stochastic, again 14 period, 3 and 3. I find this setting works effectively. This is now crossing below the number 80. Number 80. So it's going from an overbought position to sell. Fantastic. We've got the open buy and open sell. Now I want to add the close sell. So the close sell will be when it crosses below 20. No moving average needed here. So if stochastic crosses below number 20 into oversold territory, I don't want to be selling anymore, so the action will be close sell. That's created the close sell function. Now, if stochastic 14 period crosses above number 80, the action will be to close the buy. So we've now got an open buy, an open sell, a closed sell, and a closed buy. So in order to use this facility, we need to increase the stop loss and increase the take profit, so that we want this part of the algorithm to be the closing of the algorithm, not this, but we still need to have this in place should we get a nice big run. Candle period I'm going to use is 15 minute. I'm going to use euro dollar. Okay, I'm going to save that. So I'm going to save that as multi-test condition. Click save. There we go, multi-test condition. Now I'm going to run the test over all data. So scroll down, test over all data, click run test, click there, and see what actually comes in. So as you can see, what we've done here is we've created a multi-condition algorithm. We've actually created one that actually has a directional bias. For example, price is either above or below the moving average, and we're then using the stochastic as the trigger point for the trade. So as you can see here, we're building up a dossier of results. Okay, we've done 6 months so far, and now it's building up through 6 months, 7 months, etc., etc. So what we'll do is we'll come back to this and show you what happens at the end of the result once we get it. Okay, so as you can see, we've coming to the end of the backtest. When we looked at the backtest earlier, we could see that it was starting to get some strong moves to the upside, although it had a little bit of drawdown here, this strategy. What we can see here is that it's actually currently sitting in a negative loss situation. So it's actually sitting right now at minus 270, around about the minus 300 pip of situation. So minus 600. Now it's pushing right the way down, and we're almost at the end of 2019. So it's actually completed almost 3 years of back testing, and it's created a scenario where the result at the end is minus 470. But look at the winning trade ratio. Look at the lost trade ratio. This particular strategy had over 897 wins and 453 losing trades. So that means that it had a much higher winning ratio compared to the losing ratio. But it doesn't mean that it's a winning strategy, because at the end of the day, had you run that, you would have been 470 pips down. Yes, at one point you were 800 pips up. But generally speaking, this overall, if you want to calculate from there to there, is a losing strategy. So what could you do? You could either re-edit this, you could look at this and maybe change the instrument. So we could actually change the instrument, and let's look at something else. Let's look at, say, running this on pound against the yen and running the test again. So let's do that now, run the test again, and we're using a different instrument. So now we're going to see what that gives us. So actually that's now given us a different instrument, a different currency pair, and it's now testing the same strategy using a different pair. Now it started off positively, now it's heading down. This is the beautiful thing about having back tests, to be able to do back tests on various pairs so that you can establish, a winning strategy as opposed to a losing strategy. Now, right now, this particular winning strategy, which isn't a winning strategy, is 1,800 pips down. It's not fair to actually comment on the overall figure because we haven't got it yet. But in a moment when we come back, we'll see what the final figure is. But right now, what the point I'm making is it has more winning trades than losing trades, but the overall profit and loss is down. So we'll come back in a moment and see what the final result was. Okay, so we can see this particular strategy is seriously drawing down. We know we would be using something like this, but it highlights the point I was making earlier, is that you have more winning trades than you have losing trades, but overall the P&L is showing a serious drawdown of profit. So, all together there we've got over 8,000 pips of loss, but our winning trades are considerably higher than 50% of the total trades. Total trades 1365, winning trades 786, losing trades 579. So in the grand scheme of things, you might have a look at this and go, oh, this has got more winning trades than losing trades. But look at the overall P&L. Now the reason for that is because the losing trades are going to be bigger than your winning trades. And this is the thing I want to show you. Losing trades. Look at some of the winning trades here, guys. So we've got some winners. We've got quite a lot of winners. 31 pips, 15 pips. But then you've got a 15.6 pip loss. 6 pip win, 11 pip win, 10 pip win, 6 pip win, 100 pip loss, 100 pip loss. These two actually use the stop loss to close the trade as opposed to the close sell or close buy. We go to page 2, which is again in May this year. 100 minus 5 minus 100 minus 100. So it had quite a lot of losing trades, this one, and they were quite lumpy losing trades. Page 3, 1, 2, 3, 4, 5, 6 winners, 1, 2, 3, 4 losers. But look at the losses. 11.5, 46.6. There's not been one trade of a winner on that page that has as much as a 46 pip win. Page 4, all losses. Page 5, 26.8 pip win, 27 pip win, 26.8 pip win, 13.1 pip win, 3.8 pip win, minus 7.4, minus 19, minus 100, minus 0.9, minus 100. So we can see by scrolling through the trades, and this is why the trades function is so useful, is to look at each individual trade to see actually what's going on. And although it has a lot more wins than losses, the losses are lumpy. I want to say lumpy, they're big. So what I'm going to do is I'm going to run the same strategy, but I'm going to remove the close sell and close buy. Now I'm not saying we don't ever use close sell and close buy, because sometimes it works in your favor. However, what I'm going to do is I'm going to delete the close sell and I'm going to delete the close buy. Okay, and I'm going to go back and I'm going to then go back in and edit it. Okay, now we've just got the buy and the sell, and I'm going to run the same strategy, and I'm going to change the stop loss to 20, and I'm going to change the take profit to 60. So now what I'm going to do is I'm going to go back to euro dollar, and I'm going to run the test again. I'm going to test this over all data again, and I'm going to run the same strategy, but we're removing the close sell, close buy, but changing the stop loss and take profit so that it will use these levels here to close each trade. So each trade will either be a 20 pip loss or a 60 pip win. Same time frame, same currency pair. Click run test, open this up, and let's see what happens. We may not get the same results, we may get worse results, we may get better results, but let's just see how it pans out. So at the moment it's sitting around about break even. It's actually completed 3 months of testing so far, but let's see exactly how it pans out. We'll do 4, 5, 6 months to start with, and then we'll come back and look at the result in a moment. Okay, so as you can see, we're coming to the end of the back test. It's back testing now October 2019, and it's now, as you can see, it's a bit erratic, but generally speaking, for the whole period of the back test, it's been a strategy that's in profit, currently sitting around 300 pips. So we're just waiting for the final figure to come in. But we're using this just purely simply as an example to show you what makes a winning strategy and what doesn't. So this one's ended up on 280 pips of profit. Fell away quite a bit at the end. Again, don't worry too much about the result. But look at the winning trades compared to the losing trades. Okay, it's taken 890 trades in total. The winning trade number was 226. So that's pretty much, I would say, under 30% of the trades that were taken were winners. Okay, so if it was 30%, it would be 270 or thereabouts. It's taken less than that. So it's actually got a very low success rate. But, and this is the caveat, this is the however, this is the but, the winning trades outweigh the losing trades in number. When I say number, I mean in the volume, in the actual size of them. So this particular one, yes, it's not a very good one. This is 10 trades, 9 losers and 1 winner. Here, 1, 2, 3, 4 winners. 1, 2, 3, 4, 5, 6 losers. But if we added these up, 60, 120, 180, 240, so 240 pips of profit, 20, 40, 60, 80, 100, 120. So although the win to loss ratio is 6 losses and 4 wins, the actual overall strategy in those 10 trades actually made twice as much as it lost. And so on, and so on, and so on. Here, look, 1, 2, 3, 4, 5, 6, 7, 8, 9 losses and 1 win. Now, this is because it's an algo system, and this is an algo system, so you wouldn't be watching this. Had you been trading manually through here, you probably would have gone, oh no, not another losing trade. Close the system, stop the trading. Let's look at why it's not making money. But overall, as you can see, as we go through, the wins when they come, and there you had 2 on the spin, 2 on the spin there, okay, and so on. And if we go to various random pages here, look at this, 1, 2, 3, 4, 5 wins and 5 losses in that period. Okay, in that period, that is a serious movement in the positive direction. So the point I'm making here is, although the result isn't a great deal, it's highlighting the fact that you don't have to have more winning trades than losing trades. And by editing your settings and editing around with your risk management, currency pair, instrument you want to trade, and time frame, you really can start to capitalize on using a higher reward to risk, i.e. your reward is 60 but your risk is 20, to give yourself an edge when you're trading using Tekton. Okay, so in that example I've just shown you what really happened there. For many, seeing that type of thing for the first time can be confusing and strange. The fact that you've had so many winning trades, so few losing trades compared to the winning trades, yet your strategy doesn't make money, isn't profitable. Yet, on the other hand, when you had a scenario where your winning trades were a lot lower than the losing trades, you came out at profit. And the difference between the two was a negative or a positive result. So it can be, and I understand completely that that can be confusing and strange. However, don't be put off by this. It is one of the wonderful benefits and features of using Tekton that Tecton is so cool for using various different ways of creating a strategy and backtesting the strategy, etc., editing it. But before you actually go to market with anything, you are able to test the results and adapt the strategy and the algo to suit yourself. So, as I said, we're showing you how to create a winning strategy here. Winning strategies. How to create a winning strategy. A winning strategy is a strategy that makes profit, generally. Not the fact that it has more winning trades than losing trades. It's about overall profitability. And the fact that you can go and test before you go to market is a fantastic feature of Tekton. However, in essence, what has happened there in that video is that you have been working smart as a trader. Now, I don't want this to sound patronizing in any way, shape or form, but you are smart anyhow by using Tekton. But what you are doing is ensuring you keep winning trades running for longer and effectively are stopping losing trades early so they don't get out of control. I've met lots of people over the years who have had previous trading experience, and they all say to me, more often than not, Mark, I found that when I won a trade, my winning trades were a lot smaller than my losing trades. My winning trades, although they were there, I was only winning small amounts, but when I was losing quite big. And that's because the losing trades were just left to run and run and run and run. And again, if you go back to the first webinar we did, Trading Psychology, this is really a big part of psychology, and this is where Tekton comes into its own, because there is no emotional attachment to this. You don't see the losing trades. As long as you've got a higher winning strategy overall, profitability wise, you will get losing trades, but you're not going to damage yourself by watching them because Tekton will be there. Now, if it does get out of control and all of a sudden you have losing trade after losing trade after losing trade, one of the features I'm going to share with you on a subsequent webinar is the drawdown for the strategy, the drawdown and take profit for your strategy feature, which is a very integral part of Tekton. But right now we're talking about reward to risk and having a higher reward to risk using a smart way of approaching it. So it's effective, isn't it? And above all, it's smart trading. So smart reward to risk management. What are you looking here is a stronger reward to risk. Over the years, many people that have been on my workshops or I've coached privately or whatever, and as you are all aware, you can all spend some time with me privately on one-to-one. Most of the information and the material we give is free, but there are one or two paid things you can get involved with as well, which is private one-to-one tuition. Head over to that if you want to have a look at more about that on our courses section on the community, where you can spend some one-to-one time with me. And obviously the other workshops, the Trading for Beginners workshops, and I'm going to be introducing more advanced workshops as well for those that really want to progress using more advanced techniques and advanced strategies. But generally speaking, some the things we're doing, like these webinars, are free to watch and free to use and free to look at. So, but over the years, many people that I've trained on workshops and individually have asked me the following question: Mark, how do I increase my risk on my trade? And it's a very valid question, if I'm honest. My usual reply is, before I do show you how to increase the risk on my trade, or on your trade I should say, can I ask you why you would want to do that? So I simply ask why before I do so, why would you want to know how to increase the risk per trade? And the most common reason, if not the only reason I get back, is so I can make more money. Because if I'm risking more money, I'm going to be making more money. And it's usually at this point I suggest the following. Why don't I show you how not to increase the risk, but keep the risk low, but show you by how increasing the reward, the difference that will make for you as a trader. Let me show you now exactly what that means to you and the benefits to you and your trading account moving forward. Okay, so we're going to talk about the relationship between the reward and the risk. And in this example, we're looking at a month to view, 1 month of trading. 1-to-1 reward to risk, 10 trades with a 1% risk on the trade. A 50-50 success rate. So I'm using all of the round numbers to make this calculation demonstrate easy enough. What that means is that 50% of the trades out of the 10 would be winning, and 50% of the trades out of the 10 would be losing. If you're risking 1% per trade, then your 5 winning trades would be 1% each, which means a 5% overall profit from the winning trades in that period. Your 5 losing trades will be 1% each, which means that overall losing trades would result in an overall 5% loss. So your 5% gain minus your 5% loss would be a net result of 0. So you would have to adopt a higher success rate to be able to make money in a scenario such as this. So let's say you went to 60-40. That means you'd have 6 winning trades, 4 losing trades, 6, 4, which would result in a 2% gain. Now, many people, what they try to do is they try to increase the risk, so they know that if they have winning trades, that will give them a benefit. So let's change that back to 0, change this back to 5, change this back to 5, change this back to 50-50, but we'll increase the risk per trade to 5. So 5 winning trades at 5% each is 25%. 5 losing trades at 5% each, again 25%. So as long as you've got a success rate which is even, neutral, 50-50, whatever your risk is, you will always end up at 0 with a 1-to-1 reward to risk. Now, if you were to go here and have a run of losing trades, 6 losing trades, 4 winning trades, that would give you a winning ratio of 20%, or winning trades at 20%, and the 6 losing trades at 5 each would be 30. That would give you minus 10. Now, let's show you in real terms. If your 6 losing trades came first, in which case your $10,000, that would mean your losing trades would be reducing by 30%, so minus 30%, which means your trading account would be $7,000 at that moment. Your $7,000, add on the 20%, that your winning trades made you, would be 8,400. So therefore you would have a net loss of quite a substantial amount, $1,600 in real terms. That's because your losing trades were first and then your winning trades came after. So that shows you that having a higher risk can sometimes really eat into your profits that you take, what little profits you do have. So I'm going to put this back down to 1% risk, 5 winning trades, 5 losing trades, and I'm going to change these back to the 1, and I'm going to change the reward to risk to 3 to 1. So we're rewarding ourselves with 3 for a winning trade, but when we lose, we only lose 1. So this is based on 1% again. So our winning trades effectively will be 3% each, 15%, and our 5 losing trades at 1% would be 5, giving us a net result of 10% in a month. Okay, 10% in a month. Now let's play devil's advocate. If we had our $10,000 and we took off our 5%, which is for our losing trades, and assume they were then all in a row at the beginning of the 10 trades, that would give us $9,500. So our $9,500 here, and add on our 15%, that's going to be around about $1,400, which will give us more than what we started with. It's around $10,900. So what that basically means is, with a higher reward to risk, you can lose more trades than you are winning. So for example here, if we just get rid of this and have 6 losing trades and 4 winning trades, our 4 winning trades would be 12%, and our 6 losing trades would be 6%, which is a net return of 6%. So we've had a serious situation where our success rate is 40, and our loss is 60. So it's a 40-60 success rate, 4 winning trades, 6 losing trades, 3% for the winners and 1% for the losers. Now the only thing I would add to that is, when you have a higher reward to risk, your success rate can drop, but you can still make money and profitable. However, your losing trades, you need to get into accustomed to actually having more losing trades, and that again is a psychological thing to deal with. But that's how a 3 to 1 reward to risk or more can really help you grow your account. Okay, so in that example you can see how having a higher reward to risk can really give you an impetus into your trading account. And you know, the downside to having a higher reward to risk is that you can get more losing trades. And I think over this workshop I've highlighted the fact that a winning strategy doesn't necessarily mean it has more winning trades than losing trades, but it's the overall performance of the strategy that's important. And another benefit for using Tekton, because you don't go through the emotional attachment with that. So many people, when I've trained them trading manually over the years, when they start to try and trade at a higher reward to risk, they contact me after a few days and say, "Mark, my losing trades are going up in number." And that's because their reward hasn't kicked in yet. It will do, but it hasn't kicked in yet. So what I want to do now is I want to do something with you, do something together, so that I can show you how I create an algorithm using Tekton, and something that you can replicate. So the next section, I'm going to take one of our previously created algorithms, something that you've all seen. If you've been with us for a while, you've seen on our forum and our community the strategies that we post. So if you haven't yet seen those and you're new to us, get yourself over to the community. Click on the topics, and there's a topic example called Strategy Examples. If you go there, you will see strategies that we've previously submitted with the codes that you can import into Tekton. It couldn't be easier. There really is now no excuse for not being able to get started with Tekton. We've made life so simple for everybody. So in this section, I'm going to take one of our previously created algorithms, and I'm going to show you all how I built it, very simply. I'm also going to show you when we play around with the reward risk settings. So how I play around with that, where I start off, and then how I get eventually to with regards to reward to risk. We can enhance the results we get over a period of time. So what we can do by playing with the reward risk settings of a strategy, and we're just talking about the take profit and the stop loss here. We've also seen already what the close sell close buy function can do, which is great. Some strategies work really well with that. But how we can enhance our results using Tekton over a period of time. And most importantly, you can replicate this process for every algorithm you create moving forward from now. I want to see, and I'm going to be honest, I want to see more of you creating your own algorithms. Yes, the strategy examples are there for you on the forum. And yes, there are people out there, quite a lot of you, creating new stuff, which we'd like to see. Share it with us. Let's see if we can work together on all of this. But I'd like to see more of you creating your own algorithms, taking responsibility, taking ownership. You know how to do it, but there's a reason why you're not doing it. And I'm hoping these series of webinars are really going to give you the inspiration to start to create your own algorithms. You can't get them wrong, because an algorithm is a creation, and if you create something and it doesn't work because of the testing results are poor, and you can adapt it and edit it and you're still not happy, just delete it. Or you can copy it, send it to me, and I can have a look at it for you. Remember guys, talk to me on a one-to-one. Talk to us. Send us live chat. If you want to get on board with one of the one-to-one sessions with me, you can do so. So more important, as I say, you can actually replicate what I'm about to show you for every algo you create moving forward. It gives you a starting place to gauge the potential of the algo you have just created. Remember, although your algo may look great and you've created your first one and it's got loads of conditions, it may not be the one to use because the performance is not key. Performance has to be key. The best algos sometimes are the most simple ones. The more complex ones, A, take longer to create, although it's really lightning fast creation. The more complex ones do take longer because they've got more than one condition in them. They do take longer to backtest because they've got to test more conditions. So quite often the simple algorithms, the simple strategies that take a minute or so to create, which again is unheard of in this industry, will give you sometimes and more often the more straightforward results. Let's jump over to Tekton again and build this together. Okay, so what I'm going to do is I'm going to create or recreate, I should say, one of our existing strategies, one of our existing algorithms that you can find on the community under strategy examples, and I'll show you where that is in a moment. And I'm going to show you how I create a strategy, but I'm also going to show you where I put the risk settings to get an idea as to the overall structure of the performance. And then we can play around with the risk and reward settings later. So let's create the new strategy. It's going to be the old 50 crosses the 200. So if moving average 50 EMA crosses above moving average 200 EMA, the action is to buy. Okay, so we've got the buy condition. We're now going to run the sell condition. So if moving average 50 EMA crosses below moving average 200, the action is to sell. Okay, so we've created both the buying and the sell condition. We're going to use euro dollar. We're going to use the 30-minute time frame. I'm going to leave the standard stop loss at 10 and take profits at 10. So it's a one-to-one reward to risk. Okay, one-to-one reward to risk. We've all seen what that does early on. Let's run the test. Let's see what happens, and let's see the result we get. So just wait for the result to start to come through. Here we go. Just click the profit and loss chart so we can actually see the results as they come through, and we'll start to see some traction now as to what's going on. So right now we're working on a one-to-one reward to risk, so we would need more winning trades than losing trades to actually make money on this one. What we'll do is we'll let the test run, and we'll come back. It's done 6 months already, and we'll see what the result is at the end. Okay, so we're coming to the end of the back test now, and as you can see, it's generally up. It's generally up, generally profitable. There's been some peaks, there's been some troughs. There's been some peaks here, and there's been some troughs here. Another peak and a trough, peak and a trough. So for this period here, it's generally been going in the upwards direction. We're now at November 2019, so we've got about another 5 months of backtesting to do, which should give us the result very soon. But as you can see, although it's profitable, this test wasn't purely and simply to see if there was a profitable result on this. I didn't expect it to be world-shattering and world-class results and earth-shattering, purely and simply because it needs to have a stronger than 50% success rate. And it does. It does have a stronger than 50% success rate. In the time we tested, 219 trades, 119 winners, and 100 losers. Now, when I'm using Tekton, I look at that result and I say to myself, Mark, this isn't actually a bad strategy. This is actually a very good strategy. This is the reason why this particular 50 crossing the 200 was one of the first strategies that I created on Tekton, and it's one that's been staying with us all the way through. But 190 pips over a couple of years or so is not really breaking the bank. It's not really that good. But, however, it gives me promise for the future, because at a one-to-one reward to risk, it gives me a strong-ish result. But before I change the reward to risk, let's just drop it to a 15-minute time frame. So we can actually go to our candle period, drop it to a 15-minute time frame, and click retest. And let's see what that result gives us. Because now we're testing on a lower time frame. So we're testing on a 15-minute candle as opposed to a 30-minute candle. Now, of course, the moving averages cross on those candles are going to be more frequent, and therefore it could be that it gives us less winning trades and more losing trades overall. We don't know, but that's the beautiful thing about Tekton. So what we'll do is we'll come back to this test in a few moments and see what the result is. Okay, so we're coming again to the end of the back test. We're now up to the period of October 2019, and it couldn't be any different. It couldn't be any more different, really. When we tested this on a 30-minute time frame, we got a stronger than 50% success rate. Now it's considerably less, it looks like. So at the moment we've got 400 plus trades. We haven't even got 200 winners yet. So it's giving us, or going to give us, possibly a negative result. So again, the beautiful thing about testing is you can test, and remember, we're testing on a one-to-one reward to risk. So I didn't expect it to make a serious return, if any return. So the 30-minute, although it was profitable by 200-300 pips or whatever it was, this one is showing that it's likely it's going to be negative. Okay, so there's the results. Okay, there are the results. Less trades, 432, but for that to be 50-50, that would have needed to be 216 winners, and it's not. It's considerably less. So that's probably 30-40% success rate, if not less. So, that's going to give us a negative return and negative result. So we could drop to another time frame. Let's just drop to 5 minutes and see what difference that makes. So again, we've dropped to 5 minutes on here. Remember your history of all tests. It's saving all your tests results for you. So as you can see here, it's saving the test periods for you. So you don't have to worry about what it's doing. So we're going to test the same thing on a 5 minute time frame. Test over all data again. Run test. And now let's see what happens with this one. As the time frames have come down, as we've seen before, the test results has given us a lot less winning trades. Right now it seems to be a little bit closer, but again, let's look at this. Let's let it test. Let's come back in a few moments and see what the result is at the end of the test period. Okay, so as you can see, we're now coming to the end of the test again, this time on the 5 minute time frame, and the overall result looks like it's going to be pretty shocking, really. Remember, this is still 1-to-1 reward to risk. 1-to-1 reward to risk. So we are risking 10 pips to make 10 pips. That's a 1-to-1. It's on a 5 minute time frame, and the difference between the winning trades and losing trades is about 130. So it's about a 10% swing out of all the trades. We've got 1,300 plus trades, 619 winners, 747 losers. So we know for a fact it's not going to give us a positive result, purely and simply because there's more losing trades than winning trades at a 1-to-1 reward to risk. And that means that we've got a less than 50% success rate. So what we've learned from that is on the 30 minute time frame, if we go to the history of all tests, on the 30 minute time frame we got a positive result. On the 15 minute time frame we got a less positive result, and on the worst case scenario, it was 5 minutes on we got a very, very poor result. So now what I'm going to do is I'm going to change the risk reward. I'm now going to change it to 30 pips, and I'm now going to run the test, this time using a 10 pip stop and a 30 pip target. Now this changes the dynamic somewhat, because if we get a 50-50 success rate with this, then we're going to be in a very strong position. I don't expect it to be 50-50, I expect it to be less, but let's see what happens when we run the test. Stay on 5 minutes, so I've worked from 30 down to 5. I won't bother going to 1 minute, and then now I'm going to work my way back up again using a higher reward to risk. So let's run the test and see what happens. And there we go. So as you can see, it's now taking trades. It's now giving us a result. The result before for this particular example was 1,280 pips of loss. It might be just as bad, but what we're doing is we're checking it, we're testing it to see what the actual figure is. Now we have a higher reward to see what the actual figure is. Now we have a higher reward to risk. Every losing trade is 10 pips, every winning trade is 30 pips. So let's let this test run out, and we'll come back in a moment to see what the result is. Okay, so we're coming to the end of the test again. This is on the 3-to-1 reward to risk on Euro-Dollar 5 minute time frame, and as you can see, although we had 1280 minus 1280 pips, 1,280, we have shaved that result by the looks of it by adjusting the reward to risk. Still not profitable by any way, shape or form, but by changing the reward to risk, we have changed the parameters of the result. Okay, so now let's drop, if you look at the history of the test before I do go anywhere else, the 1280 was 1-to-1, This is 3-to-1 reward to risk. So we've actually almost shaved that by 700 pips. So what we could do here is drop back up to 15 minute and test that on a 15-minute time frame, just to see what that difference makes for us using a 3-to-1 reward to risk. So let's see what results we get with a higher time frame. The trades are all coming through now. What we'll do now is we will let this run and we'll come back and look at this in a few moments. Okay, so now we are coming to the end of this test, and this is on the higher time frame, higher reward to risk. So we're testing on a 15-minute time frame, 30 pip take profit, 10 pip stop, so 3-to-1 reward to risk. What you can do as well, and I'll show you this in a moment, is when you actually find these results are getting better, but they're still not getting to where you want them to be, is you can actually increase the stop loss and increase the take profit. So it still remains 3-to-1, or 4-to-1, or 5-to-1, or even 2-to-1. It's your choice. And you can then increase the stop loss and increase the take profit accordingly. So if I was to put in here, say 15 stop and 45 take profit, I'm giving the trades more room to breathe, but I'm also keeping to the 3-to-1 reward to risk. You could also look at the 20 and 60, which is what I'm going to do in a moment. So in a moment we can look at 20, 60 and see what that gives us. So we've got a result, okay, minus 340, so it's coming in the right direction. History of the tests before was 550 minus, now it's 340. Okay, 540 here on the 15-minute, and the 15-minute here with a high reward to risk was a better result. So let's now change it back to the 30-minute and give us a test and see what that comes out at as well. So we're now running this 3-to-1 reward to risk on a 30-minute time frame to see what result we get now. So trade results are coming through. They will take a little bit longer on a 30-minute because obviously it's a longer time frame. It's trades are less frequent, etc. But then we should start to get some results come through. We're up to 5 or 6 months now. So let's come back in a moment or two and see what the final figure is. Okay, so we're now coming to the end of the test on the 30-minute time frame. We've increased the reward to risk to 3-to-1, 30 pips take profit, 10 pips stop, and as you can see, it looks a lot more green. There's a lot more healthier return and a lot more healthier profit on this one so far. There's not any red at all, and we've seen red on most of the other ones. So as you can see, this is looking quite positive. Unless we get a major calamity in the last few months of testing, we're going to see a pretty good return, I think, here. You know, anything up to 1,000 pips or more is good. So anything between sort of 500, 600, 700 pips and 1,000 pips plus is a good return, because you can run multiple strategies to get you the total profit. But you know, this one's looking quite good. We're up to almost 800 now, and it proves the point that if you adjust the reward to risk, you can get a good, strong, positive return. So the result was 810 pips, 219 trades, 75 winners. Okay, so that's probably about a 35% success rate. So 35% success rate, so 75 winners out of 219, yet you've got a very strong P&L. So winning strategies, this workshop is all about winning strategies, how to create a winning strategy. And I hope that you've learned something there about how to adapt your strategies and adapt your reward to risk to really capitalize on that. So the last thing I want to do for you now is I want to just adjust this and change that stop, and as you can see, it looks a lot more green There's a lot more healthier return and a lot more healthier profit on this one so far. There's not any red at all, and we've seen red on most of the other ones. So as you can see, this is looking quite positive. Unless we get a major calamity in the last few months of testing, we're going to see a pretty good return, I think, here. Anything up to 1,000 pips or more is good. So anything between sort of 500, 600, 700 pips and 1,000 pips plus is a good return, because you can run multiple strategies to get you the total profit. But this one's looking quite good. We're up to almost 800 now, and it proves the point that if you adjust the reward to risk, you can get a good, strong, positive return. So the result was 810 pips, 219 trades, 75 winners. Okay, so that's probably about a 35% success rate. So 35% success rate. So 75 winners out of 219, yet you've got a very strong P&L. So winning strategies. This workshop is all about winning strategies, how to create a winning strategy. And I hope that you've learned something there about how to adapt your strategies and adapt your reward to risk to really capitalize on that. So the last thing I want to do for you now is I want to just adjust this and change that to, say, 60, and change that to 20. So I'm adjusting the stop loss, adjusting the take profit, while retaining the 3-to-1 reward to risk. And let's retest that now to see what that impact that has. So it's now going to test the same strategy, but this time using a 60 pip target or take profit and a 20 pip stop loss. So the trades will be less frequent, because each trade will take slightly longer to get to either the stop loss or the take profit. But generally speaking, we've retained and maintained the reward to risk ratio. So let's leave this to test, come back in a few minutes and see what's going on. Okay, so we're now testing, or coming to the end of the test for euro-dollar on the 30-minute time frame. It's the same strategy that we've been using for the last several tests. Same currency pair. We've just adjusted the time frame, and we've also adjusted the reward to risk, and now we've adjusted the reward to risk from 1-to-1 to 3-to-1, and now we've gone from 10 stop, 30 take profit to 20 stop and 60 take profit. And as you can see, although we had a little bit of red at the beginning, we're now in a completely different place with regards to the return. And again, I don't want to keep going on about this, but I can't stress enough the importance of being able to test your strategies fast and testing them in an effective manner. Tekton is really cool for that. Okay, I know many traders out there in the past have tried to backtest and create strategies using auto trading software or expert advisors on MT4, and they take so long to do. And in today's workshop, you've seen me create a strategy in probably a minute, and then spent the last 5 or 10 minutes or so backtesting different parameters of it. And now we've actually got to the end of this result, and we've now tested euro-dollar on a 30-minute time frame, 20 pip stop, 60 pip take profit, and it's proven to be the best result of all three settings. 1,260 pips of profit. Now if we look at the trades at the bottom, we can see winner, loser, 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 winner, loser, 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 loser. And we know that's the case. And that's probably to do with this area here. But if we keep going back through the test results, we'll see the times when we have those dilution of losses with quite a few wins. 1, 2, 3, 4, 5. 5 winning trades compared to 5 losing trades. Each one of the winners is 3 times the loser. And in that period there, had you been risking 1% on a trade, you would have grown your account by 10%. You saw the earlier part of the workshop where I showed you if you adjust the risk reward and if you adjust the percentage, winning trades, losing trades. So this was between the 11th of May. Sorry, no, that's actually, I'm just going to go through, this is 5th of November to the 6th of January. So in 2 months there, you would have grown your account by 10%. Let's look at the next one, page 4. This one's 1, 2, 3, 4, 5, 6, 7, 8 losers, 2 winners. So that would have been, a little bit of a downwards movement. Okay, but then here, look at this: 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So again, a 10% swing on your account between July and November. So you can see on average, this is going to be looking to achieve around about on average 5-6% a month. Just by playing around with the settings, playing around with your risk management, and playing around with the settings on the reward to risk, and playing around with the time frame. Guys, don't be afraid of using Tekton. Don't be afraid of jumping on Tekton and playing around with it. And remember, guys, you've got the ability to spend time with me one-to-one if you want it. You've got the Trading for Beginners workshops, and you've also got the live chat, which you can just ping us a message or send us a message on the email, theteam@poweredbytekton.com, where we'll be more than happy to reply to you. So I hope today you've learned a little bit more about how reward to risk can give you the ability to create winning strategies. Today's been about winning strategies, how to create them, how to edit strategies to make them more likelihood to be profitable. And I hope you've learned something today. So what I'm going to do now is I'm going to jump back to the chat window to answer any questions that you may have about today's webinar. Okay, you might not have been able to hear me, but you can hear me now. I do apologize, guys. So we're now going to jump into the question and answers that I've been given on my chat window down on my right-hand side here. So I hope that you understood that. The whole purpose of that exercise was to show you that quite often strategies that have more losing trades than winning trades can be overall a much stronger result. And the reason for that is because when the winners take place, they win more than what the losers do. So sometimes having the ability to have Tekton and auto trading where you don't actually watch it can really give you that help with regards to managing your emotions moving forward. So that's where Tekton really comes into its own. And quite a lot of those systems you saw where they had higher winning numbers and lower losing numbers, often over the longer term, didn't make money. So the whole idea is creation of your own strategies that use a higher reward to risk often makes sense. So we've got some questions. I'll answer these questions, and I won't read out the names of the people just to save any potential embarrassment. I'm not saying they're bad questions, but just so I won't read out the names because of data protection. So the first question is, can you have a stop loss as low as 10 pips? Great question. So the best way to answer this is that you can have a stop loss as low as you want. You can't go to 0. I wouldn't suggest going as low as 1, 2, or 3. but 10 is probably pretty much the lowest you want to go. But if you're trading a currency pair with a spread, and you can check the spread on the Tekton Trader charting platform, you can check the spread. If the spread ever goes above 10, then the trade won't be triggered. So the last thing you want to do is have a stop loss on a strategy as low as 10 when you're trading some of the more exotic pairs, say Aussie yen or Aussie CAD or something like that. Euro dollar, you'll be fine. You should be no problem at all. But 10 is, you can go as low as 10, and I hope that answers that question. We've got another one here. If I create an algo, is it okay if I export it and send you the code? Okay, so as you're all aware, Tekton has the ability to export a trade, and then that gives you a unique code that you can then send to somebody else, and they can then import that code into their Tekton version, and it displays the strategy, and they can use that strategy. And the answer to your question is yes, you can. If you've created an algorithm on Tekton and you want me to take a look at it for you, just ping me an email, mark@poweredbytekton.com, and I'll be more than happy to have a look at the algo you've created with the code, put it into my version, and have a look at what's going on for you. So I'm more than happy to do that for you. If you've got an algo that you've created that you want me to have a look at, see what's occurring with it. So yes, absolutely, we can do that for you. Next question. How does Tekton backtest so quick? Well, the backtest that you saw on the webinar were broken. I didn't show you the whole backtest because of time. I didn't want to waste too much time just looking at a backtest taking place. So I did the beginning and I did the end. But on average, a backtest with one or two conditions, no longer than probably a minute or two. The more complex algos with more than one condition and close sell, close buy can sometimes take a little bit longer. I think the record length one we had was about 4 or 5 minutes. But that's really much quicker than what you would get on other backtest engines. I've looked at MT4, and I think also the algos, the question on the algos as well, how come, and that was a question underneath, it says, how come it takes you so quick time to actually create the algos on Tekton when I have to buy them on MT4? Well, remember, guys, MT4, the trading platform, allows you to import expert advisors, or EAs, and what they are is a piece of code that you either need to know how to write, which is a difficult language to learn. MQL is the language. So if you don't know that language or how to code it, you have to then buy someone or spend time and spend money on somebody doing it for you, which can take a fair while. They can take, probably a few days or weeks to actually create one simple algo, and then you've got to rely and hope that the actual algo has been written correctly, and then plug the EA into MT4. So Tekton allows you, the trader, and you, the user, to simply just select the drop-down menus, as you've seen me do today, to create the algo. So that's how it's done. I can't share with you how it does it because that's the brains and behind the power of Tekton. But it does it simply by dropping down those menus, and you just select the indicator and the operator function that you want. Notice now all of the operators and indicators are all in order of what they do. So all the momentum ones are in one place, all the oscillators are in another, etc., etc. So, that's the beautiful thing about it. And there's also now on the forum and community, just I want to add to that, the indicator series of videos. So we cover most of the more common indicators, how they work, how you use them, and also the operator series as well. So we've now got videos for each of the operators that are used within Tekton. So that's, again, a great advantage for you guys to get onto the community and see how those work. Okay, so the next question is, can you share the strategy you shared with us? So the strategy I shared with you, the 50 crossing the 200, is one of the ones that's actually on the forum under the strategy examples section. I'll also share the code with you for that, and share the code with you for the earlier strategy I created, which was the multiple condition one. So when we publish the recording of this webinar, I'll just publish underneath the code for both of those strategies. Okay. I'm new to trading, and your teaching is very good. How can I learn how to trade more advanced stuff? Okay, so if you're new to trading, guys, and today's webinar has given you an inspiration to want to get on board and learn how to do this properly, then we have a trading for beginners workshop. Now, although it sounds like it's very basic, it covers in bite-sized chunks what trading is all about and how you can then go on to create strategies. I do teach indicators on it. I do teach what they do. It's all in small bite-sized chunks. You can get hold of the Trading for Beginners workshop on our community, and you know where our community is. The webinar link was where the community is. It's the Tekton forum, tekton.mn.co, and there you can see the available workshops that you can actually get on board with. So the Trading for Beginners one is very simple. There's some tests throughout it so you can check your progress, and in that is going to really give you the ability to get yourself started. It's about 3 hours long in bite-sized chunks, so you can stop, take a break, watch it again, rewind it, whatever you want to do, and to help you really excel at trading. Okay, I've got a demo account which I'm running some algos. How do I now make this running live? Okay, so if you have been running a demo account and you want to open a live account, I do know we've got some of our broker partners clients watching this, so you're okay. You've got your trading accounts with your broker. That's one of our broker partners. But if you're somebody who has a demo account and you want to open a live account, if you are in UK and Europe, you can use our broker BFB. BFB, and you can get their details and their link to open up the live account on the poweredbytekton.com website. Click Trade Live, and that will take you to the BFB portal, and you can then deposit using World First. So you can actually transfer your funds into BFB very quickly using the World First portal, and that will allow you to transfer funds from you into your broker account and then start using Tekton Live. If you are watching this, and there's quite a few of you watching this from Africa and Asia and further afield, then XTB are your port of call for broking. We've got a broker partnership with XTB Online. They're a great broker, as are BFB, and you can also find their registration details on the poweredbytekton.com website under Trade Live, and just select XTB. So that's for worldwide other than UK and Europe. So I think we've got one more question coming through here. Okay, regarding the one-to-one coaching you mentioned, how long is that? Well, if you pop over to the forum and the community again, where you'll see the recording of this and where we update daily, you'll see there is a one-to-one option, and you can choose whatever time you want to spend with me. We can do that on Skype. I can watch what you're doing on your screen. You can watch me on my screen, and I can just generally coach you and spend one-to-one time with you and move you forward. So I think I've actually covered all of the questions there. Thank you for those questions. Really useful. Can you show more diagrams in the future? Yes, I can. No problem at all. I didn't really want to use too many diagrams because today is all about reward to risk and how impactful that can be on a trading business, especially using Tekton, where you can actually, change the trade stop loss and the trade target and tweak those and keep editing and tweaking those and testing till you get your optimum results. We could have gone on further than that. We could have gone to say 30 and 90 pips. So we're actually looking at or 20 and 90. So we've got over 4-to-1 reward to risk, and see what difference that makes. So there is an endless way of doing this. So it doesn't just end here. It goes on, and it can go on. So moving on, guys, the next webinar, just going to give you the date of the next webinar. Our next webinar will be on the 3rd of June. It's a Wednesday. Okay, it's a Wednesday, the 3rd of June at 2 p.m. British summertime. We will send out the link to everybody. so that you can get yourself on board with that. Remember, with registration, as soon as you get the link, click the link and register, and you'll be then registered for the event, and then you'll be in the lobby ready waiting for you to join. Because we had a few people still today coming on board at 2:10, 2:15, clicking the link at 2, and then taking a bit of time to log in, especially if you're in an area where there's a the Wi-Fi and internet isn't so strong. So I hope that you've had value today. I believe that we've got the questions that have come through. Thank you, Mark. Thank you, Mark. Yeah, thank you, Mark. Yeah, you're more than welcome. Look, at the end of the day, these webinars are not for my benefit; they are for your benefit. And your thanks is appreciated for me. We're creating new things all of the time. We've got some great things coming up with Tekton. But if there's anything specific you would like me to cover on these webinars, then please drop us a line. You can send me an email to mark@poweredbytekton.com. You can send me an email and we can get on Skype and I can discuss anything that you want me to cover on these webinars. I'm happy to do topics wherever I am able to do so, as long as it doesn't breach the Data Protection Act and doesn't breach the civil rights, liberty and civil rights bodies and legislation. I'm happy to cover most things off on here that can do with trading and Tekton moving forward. So, Tekton, as far as I'm concerned, is a major breakthrough in trading with regards to automatic trading. We're getting a lot of broker partners come on board and want our product, and I'm doing a lot of training with brokers, and things are really looking good for the future. So, congratulations to the guys for choosing Tekton. Congratulations for getting on board with these webinars, and I look forward to speaking to you, and some of you hopefully on one-to-ones between now and the next webinar. And I look forward to seeing you on the 3rd of June, where we'll cover off another very interesting and rewarding topic. Thanks for watching, and bye for now.